Hi everyone, thanks for joining our webinar today. My name is Iqbal Branch and I head up marketing and product strategy for OptionsCity. As you may know, OptionsCity's mission is to simplify the way clients think about and utilize trading technology. We've been in this space for over 9 years and have offices here in Chicago as well as New York and London. OptionsCity is the leader in options on futures software across major asset classes with 2 core product offerings. We offer CityTrader, which is a web-based platform for professional traders interested in trading futures and options on futures. And we also have our flagship product, Metro. The presentation today is geared towards users of our Metro platform. Metro is a low-latency, server-based platform largely focused on market makers, proprietary trading firms, and institutional traders. We have a large audience of energy traders who utilize Metro for risk management, pricing, and execution. We've worked with our energy customers over the past year on adding more sophisticated functionality, and we're excited to share some of those new features today. I have joining me today Rob Perkins, account manager for Metro out of New York, who will demo some of the functionality. We expect the demo to last about 20 minutes, and we'll leave plenty of time for Q&A, which you can submit through your chat box and GoToWebinar. With that, I think we'll go ahead and get started, and I'll turn it over to Rob.
Thanks, Iqbal. I also wanted to take a minute here to say thanks to everybody for joining the webinar, and like you said, please feel free to chat in questions as we go, and I'll do my best to answer them as we're going through it. And if we're unable to get to them, please feel free to reach out to us for a one-on-one demo as well. So quick background about myself. My name is Robert Perkins. I've been with OptionsCity now for about 4 years. I've worked out of the Chicago, London, and New York office. And for the last 2 years, I've specifically been working closely with our larger energy groups, market makers, hedgers, brokers, all different types of traders. And what we've been doing is kind of taking our clients' feedback and adding some of the functionality into the system. And we've also come out with some new product offerings that are specific to different types of traders. Some of the ideas that we're going to cover here are ways to look at and manage your skew risk, ways to adjust vol across a term structure, because the energy markets trade so far out, it can be difficult to actually keep track of your values out in 2020, something like that. And then better ways to access the complex order book, to find a specific spread in a list of 1,000 different spreads. Okay, so I'm going to start out here with showing you some of the changes that we've made to our model. They're related specifically to wing slope and the shape of the wing slope. So I'm going to go ahead here and I'm going to open up the model page and we'll go to front month. So if any of you are familiar with this problem, you'll know exactly, if you've traded and you're worried about teenies out on the skew, you should know exactly what the issue is I'm referring to. In the event that there's an extreme slope along the wing, there can be a scenario where when the slope hits the interior of the curve, essentially what happens is it breaks the model and you can get some unrealistic gamma right along that point where it meets. So what we've done is we've added the ability to put in a shape along this to give you a little bit of dimension along your slope and a little bit of a smoothing function in at that exact point that I'm talking about where the interior of your curve hits the slope. And what that's done is mitigate the issue so that you get a more accurate gamma reading, and typically this tends to happen closer to expiration. Another feature that I've noticed that's different from our system here is going to be the vol path. So I'm going to touch on that since I have the model as well. In a lot of other systems, you're stuck with a vol path, or a vol slide, which is where as the underlying moves up and down, your at-the-money point is going to slide along this vol path. Other systems, you're stuck having just a straight linear vol path. With ours, we have the ability to put in a curve. And what that tells you is that, yes, with a shape like this, as the underlying rallies, vol will most likely come off according to the trader's opinion. But if the underlying continues to rally, vol may start to catch a bid again. So again, it just allows you to get a little bit more accurate Greeks as you're going along. The other thing in the model, last thing in the model I'm going to show you here is the term structure view. So what we have here we call the lasso adjustment. So maybe the front 6 months are liquid enough to where you're comfortable just coming in here and saying imply to the market, and it's just going to shift your skew in between the implied vols and the bid ask. Well, what you can do with the term structure is you can say, I know what my my time spreads are in line. My straddle's in line on this further stuff. I'm comfortable fitting the front 4 months to the market. So what I'm going to do is I'm going to come in here and I'm going to say start with no, set that as my base month. And as I see prints coming in and out in anything in November, I'm going to raise and I'm going to lower. I got to choose my front month here. So I'm going to start with November and end in Jan. So what I'm going to do here is I'm going to come in and I'm going to adjust just no, Dec, and Jan according to a weighted Vega ratio. Meanwhile, Augie, Sep, and Oct remain fixed because I said start with Nov and end with Jan. So this can be valuable because as maybe there's a resting offer that's out there and out in Dec, if your Dec skew isn't lined up, you're not going to see it as an opportunity. So this just allows you to keep further dated stuff in line. So the next thing I'm gonna go over is going to be just some pricing features that we have in place specific for energy markets. So let's talk about pricing up a strip. If you're trying to price a strip that is 6 months and it's covered, that's going to be the average of every option divided by the number of months, and there's going to be a vol leg or a futures leg associated with each option month in there. So that can be kind of difficult to actually price up and get accurate values for. But we have a way to do it in 4 clicks. So what I'm going to do here is I'm going to show you the LO, so this is the crude WTI product. I'm going to show you the Augie through Dec 49 call strip covered. So all I do is I click on the theoretical value, 49, click on Dec, out to Dec, and then I click add. And what you'll see is what that did is that built the spread within 4 clicks there. It says, here's my theoretical value based on the average price. And then I covered it, and it gave me the average delta, a leg in each month using the average delta. So within 3 clicks, I quickly priced up a 6-month covered spread. And I also want to mention for any market makers that trade OTC products that rely heavily on ICE Chat or CME Pivot 360, we have a way to integrate your chat system straight into your OptionsCity theoretical values. So as a broker asks you for a market, all you do is simply click on their chat, and it'll pull in your OptionsCity theoretical values and Greeks. Okay, so the next thing I'm going to move on to is kind of execution, automated execution, click trading, auto hedging, stuff like that. So let me go ahead and minimize this back. All right, so I talked about how difficult it can be to find one spread in a list of 1,000 spreads. So what we've come up with is called our hot list here. It's been in the system for a while, but we've actually made some changes. We've added the market data. You can embed live market data in around your theoretical values. You can click trade straight from there now. You can favorite specific spreads, and you can RFQ the spread. So let's say I need to look at the 48 and a half call spread, and I want to RFQ that spread to the market. I go in here and I hit RFQ, and you're going to see it automatically flows down into the RFQ viewer. And now maybe I want to keep an eye on that, so I'll just minimize this into my hot list. And here it is over here. It's 20 bid at 22. Now you may have noticed that when I RFQ'd that top line turned green. What that is I've set up, there you go, someone just RFQ'd a strangle in SEP, and again I auto-responded. So what I've done is set up missions to look for specific spreads that get RFQ'd, and I respond with my edge and my volume based on things like delta, vega, number of legs, or specific spread types. And for anybody that is a market maker that is trying to get into the market maker rebate programs, you'll understand how important it is to respond quickly, accurately, and to a high percentage of spreads that get RFQ'd throughout the day. And since we are a server-based solution that's co-located at the exchange, next to the exchange's server, these are going to be low latency spread orders and quotes that are moving around that update dynamically as the underlying moves. So you can set how long you want to be out there as well. So you'll see these green lines I've set it for 60 seconds. So I'm willing to put my quote out for 60 seconds, and then there you go. It just automatically turned off. We also have the same ability with the target finder if you're looking for electronic eye functionality. So As far as risk goes, we've added some components called delta tilt. What that's going to do is it's going to be similar to an OEV, if you guys are familiar with that, but it's going to put all of your inventory into terms of a fence or a risk reversal. So it'll tell you, as the number is about to come out, maybe you just want to flatten up skew risk, and you need to see how many 50 delta or 45 delta fences do I need to do to actually flatten up. What this number will do is it'll look at your inventory and say, hey, if you sell 30 fences right now, you'll be flat skew risk. So we've implemented stuff like that to kind of keep track of your P&L and your inventory on a skew basis. The other thing that we've started to do is to really fine-tune our APO model. We have some people, some market makers that are trading APOs. Mostly, it's all voice, so there's not a whole lot to do on the screen, but they need our model in order to do it. And our risk can also decompose the inventory down from, if I'm long 100 NOV AO, which AO is the WTI, what's the actual breakdown in the vanilla, in the LO, and we can do that as well. So it's probably better to do an in-depth demo of our APO model and risk one-on-one. So if you guys have questions on that, we can certainly do a one-on-one demo and show you guys that stuff. You know what? Actually, one last thing I wanted to show was our BBO widget. So what this is going to be working with nat gas and crude traders. They let us know that they were having issues flipping back and forth between the ICE product and the CME product, or the Nasdaq, the ICE, and the CME product. So what we've done is we've created what's called a virtual symbol that aggregates all the market data together and shows top of the book. So if you look here, the product is called Nat Gas. And I've clicked on the SEP future, and what it's showing me here is that it's 855 bid at 856, 15 by 2. So that's just showing me top of book. Now if I look down here in the depth viewer, it's showing me that the first two levels are CME. The third level is NFX. And we also have a smart router capability. So maybe you don't really care. Price is most important. So I don't really care what exchange it's on. I just want the best price. But maybe you do have an opinion on which exchange you want to do. So if they're both bid at the same level, maybe you want to do Nasdaq first, or maybe you want to do ICE ahead of Nasdaq, then CME's. You have a specific priority. So in the event that you were to send an order for 100, and there's 300 at the same level, it's going to go after your priority for your exchange priority first. And we have that ability for both futures and options.
Yeah, so Rob, there's a question about the City Store and just the BBO widget and how that works.
Oh, sure. Okay, so out of the box, we have a whole lot of functionality, but maybe there's something that you want that's specific to your trading needs, that's custom, that you don't want everybody to have, or maybe you found an algo on our City Store that you'd like us to pull in to your Metro. So on your Metro toolbar, there's this road icon here. So when I click this, what you'll see is here's a bunch of algos or apps that I've already pulled into this server. So maybe I say I want to add the Step Finder widget. So I just check it, I say Add Widget, and it'll pop up. And just like that, I have a new specific widget. And this one, what this app is going to tell me is where my order is in the book, worst case scenario. So I know that there was 100 ahead of me, but some have traded. Where am I exactly? And the BBO, again, like Iqbal was saying, for the BBO, so you would come into here and you want the smart router, which I was just saying you can choose your exchange. You just check BBO order router, add widget, and here you go. And then you would put your products and your exchanges in there and assign priority, essentially all what this one does. But it's just that easy. So if it's already on the store, you purchase it, and it'll download, and it'll appear right here. And you just hit Add Widget, and it's already in there. It really makes the platform extremely flexible and customizable.
The question that's come in about how Metro handles future spreads.
Okay, so for future spreads, there's a few different ways to do it. I guess we'll go to this city market window right here. I'll use that, and let's see. We'll go to look at future spreads. So You can have a window that's specific to just future spreads. So you could say, I just want to see the CL future spreads, and it'll list every single future spread for you. You can favorite to have specific ones. There's a lot you can do with future spreads. I mean, if you're talking about maybe the illiquid back months in crude oil, you're not going to want to price off of. So what you could do is you could come in here and you could say, I want to use the front 6 months to go off of the actual market, but then I want to use what's called an offset controller or an underlying configuration is how we set it up. But you could say, I want D16 to be priced off of D15 plus the future spreads. And what it'll do is it'll figure out which future spread is actually gives you the tightest, most accurate mid-market. So it kind of depends on what they mean by how we handle future spreads. But there's a lot. I mean, you can just execute them straight from there. You can drive your theos off of a future plus the future spread, and you can open ladders for the future spreads as well. I mean, we definitely support future spreads. So
we've just got a question regarding the BBO widget with options. Will the auto hedging be in line with a specific setting, or will it coincide with the original formatting?
So the way that I've seen most of these guys do it is they're gonna drive everything off of the most liquid future anyways. So our auto hedging logic follows the underlying that is assigned. So maybe Nasdaq back month futures aren't really liquid, so you're going to say, I'll use the CME. But you can also say, I want to use my order routing logic in the event that I'm auto hedging. So you can say, if they're both there, what it's going to do first is it's going to say, use the future that I have assigned. Now you can also override that and say, use another future, if that makes sense. That's basically what I was getting at. I hope that answered the question.
Yep, it sounds like that did answer the question.
Great.
And if there are no other questions, we'll end the webinar there. And as we had mentioned, if you have any further questions or want to get a more personalized demo of the Metro system, in particular how it deals with energy trading or any of the other asset classes, feel free to contact us at sales@optioncity.com for any inquiries, and we'll be happy to set something up for you. With that, thanks, Rob, for going over the presentation and the demo, and we will talk to you soon. Thanks very much for everyone who participated.
Thanks, everyone.